Hello, ladies and gentlemen. Welcome back to the X-Force Global channel. Thank you very much for joining me here today. Hope you're all having a fantastic week. Today, we're back with another Bitcoin analysis, and I'm here to make sure to update the price action from our prior videos and see how we can go forward. As a quick disclaimer, I must cater to both the bulls and bears to show a neutral approach to help build your own thesis on the bearish or bullish outcome. But nevertheless, I do share my probabilities and personal sentiment that is deemed not financial advice. Now, starting off with our first scenario that we have been talking about for quite some time, our overall expectation for this possible wave X is now complete for the most part. If we look back at our analysis from a few weeks ago, we have met all the targets basically. Up in the 70K to the 72K regions is exactly where we were expecting some kind of rejection. And we're getting the first sign of a rejection as we are completing this move to the upside as an expanded flat for this wave C. We were looking for a 5-wave move after this B pocket zone was fulfilled, and that is exactly what we got. Expanded B pocket zone was anywhere between the 101 to the 138, but again, based on the guidelines, we were looking for that 1236 and 1382 zone for that deeper kind of retracement, and that is exactly what we got as well. So congratulations to those who bought these regions over here. Again, congratulations to those who may be possibly expecting another rejection off of these levels. But again, we have to be rational here because with every new story that is complete, we have a new chapter to build, and we also have a possibility of more further continuation to the upside due to the fact that we had a 27% move to the off of the lows, and that's not something to be ignoring because the bulls did show a lot of resilience within this move up here. And right now, whether this corrective move is going to be turning into something larger, we'll discuss that in just a moment. Now, there are two ways after this move has now completed for this X wave. This termination here is now going to be important in terms of how we're going to be looking at this move here for this wave W. Now, there are two different ways we can look at this now since we're kind of for the most part completed for this X wave. Now, there's nothing wrong with this in terms of wave W being completed as a flat for this ABC. And there's absolutely nothing wrong with this ABC being completed as an expanded flat for wave X. But there are some people who believe that this is not the transitional wave. Rather, this move up is now deemed as a corrective move. But there's really nothing wrong with this scenario as well, because if we really take the time to boil down what other WXY scenarios we can put in, this is the only way I can put it in, which means that you're sacrificing the bad look of that impulse, which is still valid. You're now forcing this larger move here and extending that move for this wave W down to here. But the problem is this move here has to be forced as an impulse now because wave C is where it ended here. So if we have this as an ABC of a larger move here, we have wave W here. We have to fit this as a 1, 2, 3, 4, and a 5 respectively to complete this C wave. So either you choose this as your impulsive move that completes this wave W, or have wave W here and then have this larger move as the completed expanded flat and have this impulse as your completed wave C. So either or, it really doesn't matter because our wave X termination is still the same zone, right? So if we're looking for this wave X, all we're doing is now looking for the next expectation. That's the most important thing, expectation of the next possible move instead of focusing on so much of how these internal counts are going to be working because both counts are still deemed valid, right? So if we're looking for a wave W now, I do like this idea in the fact that, well, let's kind of boil down the pros and cons of this scenario. Now that we have a possible wave W being completed, this gives us a lot more room in terms of time to also finish out how this wave Y is going to be completed. Now, this wave X does seem a lot better in terms of how it's fixated as an ABC instead of a 5-wave move of that possible internal structure of that expanded flat. So I like this idea being the transitional wave for wave X. So you can see this overall has a nice relatively, in terms of time, have a pretty good look if we're going to be finishing off with this wave Y. All we have to do is now expect and to take it step by step in terms of how these levels are going to be playing out. So again, we're going to be expecting some kind of a zigzag or some sort, or some kind of possible flat idea, or some kind of triangle idea, depending on how deep of a retracement we get. So out of all these two scenarios, in terms of the X wave, we have this X wave being completed for the most part. Any move higher, we're going to have to deem it as some kind of impulsive move. And that leads me to the second idea of the double zigzag scenario. So this double zigzag scenario in terms of where the termination has ended for a larger corrective move is this wave 4 here. We're now deeming this move as a WXY that's completed as a larger W with 3 waves in here, WXY for wave X, as X wave could be any corrective structure, and now another zigzag for wave Y here respectively. Now we didn't like this idea in the first place. It was a 30% chance of a probability, but this idea has now been upgraded quite significantly, possibly to the 60 to 70% probability zone. And this idea of whether this is going to be an impulsive structure to the upside is now on the table, and the bears have to be very cautious here because maybe the dips are not going to be as deep as we would like, and that's why that wave Y is not going to be possibly a scenario anymore, and this idea becomes more of the main scenario because it's the only way we can end a possible correction here as a 3-4. So how can we divide this? Like I said, now this is the beginning of something. Remember, this was the end of something here. Now we're looking for the beginning of something, and now we have to utilize this move here as some kind of nested structure of a possible 1-2 continuation to the upside of the primary degree to make sure that we finish off this extension for this wave 3. So in my opinion, there are two different kind of corrective or impulsive nature zones that we should be looking for in terms of targets. One is going to be this higher target right here, where we end around the $100,000 regions, or we end around the $80,000 region, which may be a little bit more of a rational approach, where wave 3, instead of being so high up here, is now going to be here. Wave 3 would be here. Now, this idea is still being played out, and that's why we have to go back and forth with that wave Y idea of that first X wave scenario being complete, and we're working for that wave Y. It's too early to short the markets for that wave Y and talk about how that corrective scenario is going to be working out. Or it's a little bit too early to talk about how this impulsive scenario is going to be playing out. So you see here, at this stage in terms of the market, since our main overall expectation is completed, it's more of a time to be neutral than anything else. So if we're talking about neutrality and we're working with two different scenarios in terms of how this could be a larger impulse or we're working for a larger corrective scenario, there's no real hybrid overlap in terms of how we can be playing out each wave counts, because it's too early to say which is going to be playing out, either a wave Y or too early to say that this impulsive move is going to be playing out. A little bit too early. But if we utilize some of the evidence that's given to us, for example, we have a 27% move off the ground, that is quite significant enough for us to start predicting that maybe we are working for some kind of impulsive structure. Meaning that the only way we can utilize this move off the bottoms is that this is now going into a wave 1 and this is a wave 2 bottom. Since we breached these highs over here, this is an impulsive straight here. We're either seeing this as a wave 3 completion or a possible new 1-2, which is even more bullish as we can be seeing as it here. But again, we won't know until we get a little bit more information. Now this wave 2 again could be coming down further down. It really doesn't matter. The overall expectation is it gets very tricky from here because this wave 1-2 and this wave 1-2, basically the main hard invalidation is going to be the regional lows over here. And at that point, even the wave Y idea is going to start losing its validity. So we're going to be working a lot until we start to get some ideas whether we're going to be working in 5s or 3s, as those are the two motive of structures that we're going to be looking for. Are we going to be working for 5s or 3s? If we're looking for a lot of 3s, we know that we're going to be working in a larger Y correction, and we knew that this was the X wave termination. Or if the bounces keep occurring and we see a wave 1-2s keep continuing building and we break these previous highs, we're just creating a series of higher lows, which means that this impulsive structure now becomes a little bit more sensible in terms of how we can talk about it. And you can start scaling in more longs, in my opinion, not financial advice, if we start to do more bounces and we're starting to see more shallow bounces as we continue with the time. Now, as we see here again, this primary 1-2 is still remaining the same basis structure. Whether this is the impulsive move of an internal wave 3 being created for this extension, that's, again, we just have to wait in time, or wave 3 has already ended and we had a clean 5-wave move up just like we had for here. This is either a 3 or the beginning of a wave 1, and now we have to just work with whatever invalidation is given to us. Now, for this scenario here specifically, this here, that termination where wave 1 has started, this is going to be the invalidation. We don't want wave 4 to be entering in the price territory of wave 1. Either way, this is still going to give us a proper look. If we do some kind of sideways move, that would be the best for wave 4, and then we can continue up. And if we start to lose momentum, we can say that wave 5 is going to end anywhere around the $80,000 regions. If the markets just continue up and we just get a very shallow corrective move, that could be possible ending very soon actually, then this could be the larger extension move. So it's just up to the markets. Do they want to sell or not? That's it. That's how very simple it is. So this is the second scenario is going to be playing out. You can subdivide this into two different ideas in terms of what you want to be, more of an $80,000 person or $100,000 person. So those are the two sub scenarios for this double zigzag scenario. So we got two scenarios out of the way. We got the X wave, where we're looking for either, again, subdivision of two different types of wave Ws, where wave W could have ended here as an ABC, and we have a bad looking impulsive structure for this move, or we have a utilized expanded flat, which also has kind of its drawbacks as well for the C wave impulsive nature, and X wave is completed. Overall, this idea has completed, and we're now in neutrality of a state, and that's why we need to be very careful. But there is one bearish scenario. Now, this is the third scenario, which is the idea of a leading diagonal that has now completed. Not the best looking leading diagonal. I don't like this idea specifically, still quite low in probability, as we do need to break these lows here, but it is what it is. And that's kind of the bad thing. It's just, we have to work with the bias, right? We can sit here all day and just say that we're going to be working for this whole move to the downside, and we just look for whatever impulses are being created, right? So for this leading diagonal idea, again, we're working for a series of 5, 3, 5, 3, 5, or series of 3, 3, 3, 3, 3s. Here we have a series of 3s. 3, 3, 3, 3, overshoot for 3 of a wave, sub wave fifth rather. And then we're looking for this as the ABC. So just like that X wave scenario where we have that idea where this was both the corrective move for wave X, we can also utilize this idea of a three-way move into a wave 2, because we saw this move as the whole finished correction, right? Or a finished move for wave 1 rather. And now this move is the transitional wave for wave 2. So this idea is now overlapping with the X wave idea. However, this idea is now more of the bearish approach, right? Where we completely do not even go to the all-time highs, and now this is the end of the whole thing. This would be extremely bearish, that we're looking for a wave 3 now of the primary degree, and we're looking for, you know, a series of extensions within this wave 3 of here, and then we're going to be looking for breaking these lows finally, is basically this idea. And this idea fits in now. It's at peak validation. We got that rejection off of these highs here, but again, I don't like this wave 2 being so high. That's the only drawback to this idea, even surpassing the 886, or actually just hit the 886. So, but still, this wave 2 being at the 886, very uncommon target. Very uncommon. So this idea exists, but I would say this is pretty much the only idea that is going to be the valid idea. But if you want to be bearish, I would rather stick with the X wave idea and say that we're working in a corrective scenario, and this may be your last chance to get some kind of shorts out of the way. That's just my kind of personal approach to this. So you want to be working with this idea if you want to be bearish. Be a little bit more lenient in terms of your risk management, and say that whatever kind of evidence that we get for this wave Y completion, that will be your kind of way of ending that bearish sentiment, and then you can work for more bullish sentiment, because at that time, that's where the markets will continue up. So either that the X wave is now complete. We have two sub scenarios for this wave double zigzag. Wave 4 has terminated over here, and we're looking for a nested structure for this wave 3 extension of the primary degree, or wave 3 has already ended here, and we're working for some kind of wave 4 with the invalidation of going into termination of that wave 1, and then we're working for that fifth wave to finally complete at that $80,000 region, and that's where the bear market will start as well. So those are all the scenarios, ladies and gentlemen. There's 3 scenarios, remember. So just if you need to repeat this video, please go back and, you know, review everything I have just discussed. Again, if you're not in my Discord membership, please do not hesitate to reach out to me. The link is in the description below. If you're not following me on social media already, at X, formerly known as Twitter, please do give me a follow at XFirstGlobal. Hopefully this video has helped you. Thank you very much, and I'll come back with another update. See you guys later. Bye-bye.